Are you not entertained? Bitcoin is ripping, and those clowns over at JPMorgan may be onto something. Just in, per CNBC, the strategy favoring gold and Bitcoin now has a name. JPMorgan analysts are calling it the debasement trade. Well, that's fancy. We just call it saving our money. But it doesn't stop there. Even Morgan Stanley is starting to figure out what happened in 1971. They're referring to Bitcoin as digital gold. And CNBC is saying the government shutdown and Bitcoin going ballistic has cemented its safe haven status. What is the debasement trade? What is happening? And where are we headed? Specifically, what would it take to send Bitcoin to 500K? Strap in, it's go time, baby. Let's go. So what the hell is the debasement trade? We'll go ahead and tee up the narrator. The dollar was indeed crashing. Honestly, if you could sum up the debasement trade in one image, it's this. But if you're like me and your mom was pounding Tylenol like Skittles when you were in the womb, that just won't cut it. We need charts, we need context, we need chaos, so let's get to it. The S&P 500 is up 40% in just 6 months. Gold is knocking on $4,000 an ounce. In Bitcoin, it just hit a record 125K, a $2.5 trillion market cap. Meanwhile, the US dollar is set for its worst year since 1973. So are markets really that strong, or is the dollar just disintegrating? Gold, 40 record highs this year, worth over 26 trillion. That's 10x the market cap of Bitcoin. Silver, 2.7 trillion, up 60% year to date. And together, gold, silver, and Bitcoin are now top 10 global assets. Normally, these are safe havens, stuff that goes up when stocks fall. But guess what? The S&P 500 added 16 trillion in market cap. The NASDAQ 100 has been up for 6 straight months. That's something that's only happened 6 times since 1986. And the Magnificent Seven, they're spending over $100 billion a quarter in CapEx, fueling the AI revolution. So why the hell are safe havens pumping with risk assets? That's right, gold is now moving 91% in sync with the stock market. I don't know if that's a flight to safety anymore. It's more like complete flight from the dollar. Inflation's rebounding, labor markets are softening, so what's the Fed doing? Cutting rates! The US dollar is down 10% year to date, its worst since the Nixon shock. It's lost 40% of its purchasing power since 2000. And for the first time since the 1990s, the Fed is cutting into 3% plus core PCE inflation. We're not in Kansas anymore. Assets are pricing in a new era of monetary policy, one where the Fed has completely lost control. When safe havens, risk assets, real estate, and inflation all rise together, it's not growth. It's debasement. What you're watching isn't a trade. It's a migration from inside money to outside money. Gold and Bitcoin aren't speculative bets. They're a superior savings technology. And this right now is the sound money renaissance. Even CNBC says it. The so-called debasement trade has gained traction amid rising debts and political instability, prompting a retreat from fiat assets. Hey, look who that is. Well, come on, you know what that means, Mohammed.
Better buy some Bitcoin, Mohammed.
Take a look at this. Since 2020, here's how assets have performed. In US dollars, the NASDAQ is up 165%. The S&P up 102%. Home prices are up 56%. Now in gold, the NASDAQ is up 7%. The S&P is down 18%. And home prices are down 37%. Now let's do Bitcoin. The NASDAQ is down 78%. The S&P is down 84%. And home prices are down 87%. In other words, the rally only exists in a debasing currency. When priced in real money, it's all melting ice cubes. And the Fed just reignited the wealth gap nuke. The bottom 50% of Americans hold just 2.5% of total wealth. Asset owners, they're winning big. Everyone else getting absolutely crushed by inflation. Take a look at this. Since ChatGPT dropped in 2022, job openings plummeted, stocks exploded, productivity for machines, inflation for humans. We are in a generational shift, and Bitcoin is the escape hatch. So as the US debt knocks on $38 trillion door, adding $6 billion a day, it's clear this isn't a rally. It's a currency event. And you can see why Michael Saylor's grinning like a Bond villain. MicroStrategy just reported $3.9 billion in fair value Bitcoin gains for Q3. And get this, for every 10K move in Bitcoin's price, Saylor racks up roughly $6 billion in unrealized gains. And it looks like Jerome Powell's about to give us a pamp, and the bears, they're on life support. And that brings us to today's massive news from Morgan Stanley. Because when even the legacy giants start talking Bitcoin as digital gold, you know it's not a trade. It's literally a monetary revolution. Send it! This is the moment the institutional firewall finally cracks. Morgan Stanley's Global Investment Committee, the same crew that used to call Bitcoin too volatile, too speculative, unmodelable, just formalized Bitcoin into portfolio theory. Everyone's focused on that 2 to 4% allocation, but that number doesn't matter. It's not about size. It's about inclusion. Once Bitcoin's inside official risk models, it's no longer an outsider. It becomes part of the system. Step 1, portfolio canonization. By listing Bitcoin next to gold, they've redefined conservative. Every wealth manager under Morgan Stanley now has fiduciary cover to hold Bitcoin. Step 2, the belief loop. Across 1.3 trillion in client assets, that's 26 to 52 billion of potential flows. That drives price, that validates the model, and it forces replication. That's how adoption becomes inevitable. Step 3, narrative legitimacy. When a tier 1 bank calls Bitcoin digital gold, the meme graduates from rebellion to orthodoxy. So who wins in the global race to acquire sound money as governments debase themselves into oblivion? Where is it all gonna take Bitcoin? Max Kaiser and Peter Dunworth are about to paint the walls with your brains, and what I'm saying is, you're not bullish enough. But before we bring it home, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Let's take a quick second for our sponsors who keep this show on the air over at the Bitcoin Way. If your wealth lives in their system, it's not yours, it's theirs. That's why we scream Bitcoin. That's why you self-custody. And that's why you call our friends over at the Bitcoin Way. They'll walk you through multi-sig, self-custody, privacy, how to run a node, and the tools that keep you sovereign when the fiat system pulls the plug. Don't wait till it's too late. Book a free 30-minute consult today using that link in the show notes. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018, and they were the first to offer proof of reserves. With Ledn, you get custody loans, no credit checks, no monthly payments, and more. Visit learn.ledn.io/simply to learn more and get 25 basis points off your first loan.
You mentioned one way to deal with this is obviously raising interest rates to tackle inflation, an obvious move. But what is the answer to this problem then? What can the US Treasury and the Fed do right now to deal with this looming crisis?
Well, yeah, raising rates is what Paul Volcker did in 1980. When the debt to GDP ratio that was a possibility, and it worked after a massive debt raising of interest rates into the 19%, right? But the debt to GDP ratio right now is 10 times at least higher. So that's actually not going to work. There is no solution. That's why people are running into Bitcoin. That's why Bitcoin's worth over $1 trillion now, why it's going to $10 trillion now, is that people are running for the hills. They're getting out of Dodge. They're dumping their US Treasury bonds. They're dumping whatever they can, and they're putting it into Bitcoin. And so Bitcoin, we're going to see Bitcoin be the major winner in this sovereign debt collapse globally. That's how you get to $200,000, $300,000, $400,000 per Bitcoin. Everybody knows it now. Paul Tudor Jones, Stan Druckenmiller, Michael Saylor over at MicroStrategy, they're all openly talking about a speculative attack against the central banks. Borrow at that cheap rate, buy Bitcoin, and let them die. That's what's going on.
And Janet Yellen, for one, expects these interest or these inflation levels, rather, to persist until mid-2022. Do you think that's an accurate forecast, or could we see these problems persist into the years after that?
You know, last year, Janet Yellen said the biggest problem was deflation. Then they said, oh, you know what? It's actually inflation. Then they said the inflation was transitory. Now they're saying the inflation is going to be around for a few years. We're at the beginning of a multi-year secular inflation that will last quite a bit of time. We're leaving a 40-year bull market in bonds. It started when Volcker finished his job back in 1980, and Ronald Reagan and Margaret Thatcher came to office, and we've had 40 years of lower interest rates. Well, that's now finished. We're going to have now a multi-year period of rising interest rates. It's going to be worse than the 1970s. We're going to see major defaults across the corporate world. We're going to see sovereign defaults, and we're going to see more countries like El Salvador start to make Bitcoin legal tender to get out, and they're openly mocking the IMF. El Salvador is openly mocking the IMF on Twitter, saying, we're buying Bitcoin, and it's we're in a completely new era, a new world, a new global standard. As Rand Paul, a senator in America, has called on Bitcoin to be the new global monetary standard, not the dollar, not gold, Bitcoin.
Now, if you think that was bullish, check out this clip from Peter Dunworth.
Looking forward, I think it's fair to assume that we are going to have half the return over the next 10 years, given the fact that we now have a whole host of tailwinds coming over the next 10 years. We have regulatory approval, government endorsement, a bond market that's hungry for yield. I can talk to what that looks like by way of flows, but that basically moves us 100x over the next 10 years. And then we're within spitting distance of 1,000x from there. That's only another 10x from where we are. And so I look at this and think the use case for Bitcoin to solve a huge amount of our problems, monetary and financial, fiscal problems within the governments, is so understated right now that once people comprehend how we can use this tool to solve a lot of our problems, we're going to see an immense amount of capital flows into this. And I look at all around, the use cases, the primary use cases that I see that will lead us to that 1,000x return. The number one that I look at is we're going to see Bitcoin used as pristine collateral to effectively recapitalize our entire financial markets. The big thing that I look at here is that we have had Wall Street speculate with Main Street consequence, and Bitcoin is the first asset, commodity, whatever you want to call it, that divorces Wall Street speculation from Main Street consequence. And what does that mean? This means that Wall Street can put an infinite amount of value, and the government can put an infinite amount of value into this asset. It can go up exponentially. It can go up 1,000x from here, 10,000x. It doesn't matter, because the problem that the governments are going to solve by doing that is it's going to divorce Wall Street speculation from Main Street consequence. Up until this point in history, we haven't had a way of doing that. And there are bigger, implications for doing that lead to, peace, prosperity, the removal of the need for war. But most importantly, this is a way to recapitalize our banking system. And when the government can print an infinite amount of money, Bitcoin can store an infinite amount of value. And so I think it's very realistic for us to see 1,000x return in Bitcoin over the next 20 years.
1,000x over the next 20 years? Uh-oh. Call a doctor. It's been longer than 4 hours. I can't feel my toes. All right, but now, hypothetically, what would it take for Bitcoin to hit 500K? Today, we're sitting around 125K. That's a market cap of approximately 2.7 trillion. To hit 500K, Bitcoin needs to climb to roughly 9.8 trillion. That's a $7.5 trillion gap. Sounds pretty massive, right? But multiplier effect. You don't need 7.5 trillion in new money to get there. Bitcoin trades on the margin. Most coins never move. Price is set by the thin float. Historically, every dollar of inflow can move Bitcoin's market cap $10 to $20 plus because of that brutal scarcity. Like we said, something multiplier effect. I don't entirely know what it means. But if we do use a conservative 1 to 10 ratio, we'd only need approximately about 750 billion in real inflows. An aggressive ratio, maybe 375 billion. To put that in perspective, global equities, 110 trillion. Global bonds, 130 trillion. Gold, 15 trillion. It only takes a few drops from those oceans of capital, a few little percentage points reallocated, and Bitcoin's blasting off to 500,000. Scarcity, illiquidity, belief. That's the rocket fuel of the debasement trade. What do you guys think? Debasement trade or just saving money? Let us know down below and get those tickets to Mining Disrupt 2025. See the future of Bitcoin mining up close in Dallas, Texas, November 11th through the 13th. The biggest names in the industry. Cutting edge rigs, Bitcoin, and AI integration, the signal you won't get anywhere else. Grab your tickets today and use promo code SimplyBitcoin for 20% off, and we'll see you there. Hope you guys enjoyed this one. Don't forget to like, subscribe, and give us a pamp, and set those notifications for the best in Bitcoin news delivered to you daily. Sophie, Dante, Oceans, they got a lot of great stuff coming your way, so stay tuned. Love you guys. See you Wednesday. Peace.
If you prefer to go down with the ship, you.